Good morning, good morning, good morning. Really excited to be here today in the Benzinga office. On today's show, Dennis is going to tell us about every losing trade he's had in the last 24 hours. He's going to teach you how to buy the dip and sell the rip simultaneously. Spencer will buy the dip and buy the rip because that's what Spencer does. And at 8:15, Marc Chaikin is going to come on and tell us why he's turned from Super Bull to Super Bear. Roll the intro, Mitch.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Yeah, so that was fun. Hello, everyone. I'm here. Dennis is here.
I'm here for it.
The physical proof is in the pudding.
Can we put the camera to get you both in the same time? Let's just move it a little
Jordan
bit.
warned me he was. Well, he kind of did, but he kind of didn't. He just kind of showed up.
You just showed up and took your job. Spencer is the intro guy. Joel did a pretty good job with it, though, Spencer.
Yeah, he did.
Mitch trying to take your job yesterday. Joel trying to take your intro job here this morning. What's up?
It is a exciting day here at Benzinga. It's going to be a bit of an unusual show. The reason it's so exciting, the reason Joel is here is because the Behringer Capital gang is coming into town this morning, and we're going to learn all about all the exciting future plans for Benzinga. That'll happen right as our show is ending here. So it'll be a weird show. At some point during the next hour, I may or may not relocate to a different studio in the office if it gets too loud here, because we got a lot of people in this office right now. It is exciting. The energy is here. The energy is in our chat. Richard Judd says my job is not safe. My job has never been safe.
Neither is mine, actually.
That being said,
I'll bring on my charts. Joel, do you want to just welcome?
Yeah, let me just run down the futures. We're trading in the red by 14 3/4 handles. A little pop into that 4,700 area. Didn't quite get to the previous day's high. 77.50, that's your pre-market low. We're trading 7 points above that. I'm just focusing on yesterday's low, 71.75, because things open up on the downside after that. We have crude trading in the red by 93 cents, kind of getting allergic to that 72 handle. Gold's in the red by $9. Silver's in the red by 37 cents at 22.05. And then that's it. I mean, we got Bitcoin. I took my Bitcoin off here. I don't know. I think Bitcoin I saw in the red. But that's it. Just a little bit of red to start today, Spencer.
I suppose so. Haven't been able to say that for the past couple of days. Dennis, let's just start with your high-level thoughts from yesterday.
Well, high-level thoughts from yesterday. It's just chop fest, and that's where we're at. I mean, this is the chop fest, chop market right now. We came all the way back on the S&Ps to those highs. We anticipated that we might stall out near that 470 area. And you know what? The good news is we've held up well. We didn't just hit it and then fall off. We kind of held it. We're down overnight 14 handles, but we're holding up fairly well here, which bodes well to make you think maybe eventually we do take out those highs on the S&P. Obviously, it's been a significant rally in growth stocks. We know we can see the Cathie ETF. Rip-roaring again yesterday. Even Peloton, I almost got stopped out of my Peloton, but I did not. I had the stop set around $40 because I didn't want to make a new low on the move, and then they turned around and started buying that one too. So they're now combing around trying to find whatever high-value name hasn't went yet, which is typical, you know, what they do when you see value or when you see the growth names move for 3 days. So now they're looking for the high-growth names that haven't gone yet.
Just on a broader scale, looking at the market, the all-time high is way up there, both for the Spider and for the S&P. But yesterday, I was keen on the all-time closing high for the Dees contract, 47.0150. We closed just below that. I'm looking at the Spider, the all-time closing high, 69.73. That was made on the 18th. The close yesterday, 69.52. So even though we're off the actual all-time high. You know how I like to focus on my all-time closing highs, and we're going to have some trouble doing that today. Also, for you futures traders out there and for everybody else, I'm going to be talking D's today and tomorrow. But now, March is the official contract. We did the rollover. Choppy action a little bit today and tomorrow. I'll have my March numbers for you starting on Monday. March 22 contract, folks. 2022 is just around the corner.
I just want to say I wish you all could be here right now, because it feels like the before times. It feel like the office has not been this
so nice, eh?
The office has not been like this, like it is now, since March of last year. I mean, there's probably 20 people here, 25 people here. It's 8 a.m, right? I mean, there is energy, there is excitement. I mean, I can't contain myself. I mean, it's exciting.
I'm looking over gorgeous Woodward Avenue, and then where they have the Thanksgiving Day parade, and then the WeWork sign is still there. They can still afford to keep that up. We don't work is what I used to call it. They're across the street from us, but. Get to the markets, guys. I'll be quiet.
Okay, let's get to the markets. You want to start, Dennis, with like Roku from yesterday, or do you want to start with this new Cathie ETF?
Well, let's start with the new Cathie ETF, which launched yesterday. It's always fun when you get a new ETF out there. And obviously, she just had an interview on CNBC with Joe Kernan around 7 o'clock, pitching her new ETF, CTRU, and it is getting bid up substantially. So I have some thoughts on this, but you want me to dive right into them, or do you want to talk?
Yeah, well, I mean, I'll tell you exactly what the top holdings are in this ETF. It's the idea.
Can you show the top holdings? Do you have it there?
Yeah.
Show us the top holdings. Right. So CTRU, and obviously we have a lot of overlap in a lot of her funds. There's a lot of the same stocks, and this is some of the same stocks in this new fund that she's launched here. So the fund is trading up substantially this morning. Here's what they are.
All things told, it's pretty diversified. If your largest holding is 1.5%, you got Nvidia, Enphase, Max Linear, Teradyne, Cloudflare, Tesla, of course, Bloom Energy, HPQ, Datadog, and Buckle are your top 10 holdings. None of them more than 1.5%. So it's a pretty.
Does she have the updated NAV on that site for that fund yet?
They almost never do. They almost never will have the NAV on day 1 or day 2.
Okay.
So
number of issues here this morning. So right now, there's no locate on the street. This is only traded for 1 day. It hasn't even settled yet. So there's no locate. So we know anybody who wants to short this stock obviously has to, we've obviously had Tim Quast talking about this before, needs an exemption from the locate rules here to be able to short the stock this morning. So that's your major market makers who are probably not online here yet. So one thing, you can see it trading up 9.39% this morning. I can tell you that the underlying holdings, just from looking at what Spencer was doing on a down day, are not trading up 9.39%. So it's basically out almost 10% here this morning. There's a significant deviation between the current pre-market price and where the underlying holdings are. There's a mechanism that keeps ETFs in line with their underlying holdings, the creation redemption mechanism. That is done by market makers, where they will go create the basket of stocks between the underlying holdings and deliver them, and do the opposite as well. So that's what keeps the price in check. This price is not in check this morning, one, because anybody who wants to keep it in check, like I would keep it in check, but I can't get a borrow, and I'm not exempt from the locate rules. So I can't short the ETF. And again, if you are exempt and you're a market maker, maybe they're not online yet. So it will eventually come back in line, and I mean within the next day, or maybe even within this day, it'll come back in line with the underlying holdings. But right now, you're seeing it trade up 11% because you've got people who just watched her interview on CNBC saying, "Oh, I want to own that fund." And they're coming in, and there's not a lot of volume here. I mean, this thing's only traded 25,000 shares this morning. They're coming in saying, "Yeah, just buy it." They're not. So this is uninformed traders that aren't respecting the relationship of the ETF to its underlying holdings. That will come back in line once you have the market makers doing the creation redemption on it, and once they obviously come online. It's an early pre-market here. It's 8 o'clock in the morning. So I'm just warning the people who are buying this right now. It looks to me like they are throwing 11% away by bidding this up at 22.70 here right now, when the underlying holdings are Nvidia. So if you're buying this morning, I'm warning you right now that in all likelihood, this is going to come back in line. And this ETF is not going to be trading up 11% when we look at it from its underlying holdings in 2 days. 11%. That would mean the market is basically up 7-8% here this morning. The market is down this morning. So again, the reason this is happening is there's obviously no market maker online right now that is exempt from those locate procedures. And two, there's no locates on the street. If the locates was there, it hasn't settled yet. 2-day settlement. So there can't even be a locate for Joe investor like myself because it hasn't settled yet. So we will see locates come. We will see market makers come back online who are exempt. We will see this price eventually come back in line. Right now, it's out 12% here as I talk about it. So warning to those buying it right now.
Why do we need this?
Why do we need another ETF?
I could say, Joel, I could ask.
Why do we need the 10,000 ETFs that are out there? There's a bazillion of them. And a lot of them don't trade actively. A lot of them don't have, they're not as, actively traded. I stick with SPY, I stick with Qs, I stick with IWM, I stick with the main ones, but people want to trade different things. People want to make different money. They want to do different things. I don't know why we need another Cathie ETF that looks like it's holding the same stuff that our other funds hold.
Yeah.
But she needs it because you know what? She makes money off of it.
Well, yeah, I mean, she's providing a security to the market as everyone else does. So the main thing Dennis was saying is, like, in order for a thing to go down, there needs to be sellers who
Supply and demand.
Right. Who can sell right now? You can sell if you already own this.
Yes, and I would be selling it if I owned it.
If you bought it yesterday and you held it overnight, you own it, you can sell it.
Free 11%.
You can sell it short if you are a firm that is exempt from the borrowing rules, like Citadel is. We've discussed this with him, as Dennis mentioned, and that's basically that's the list. That's the list of people who can sell.
So tell those market makers like Citadel come online here this morning, to trade this, and whether they're already active in this ARK Transparency ETF. I did not look at the trading action yesterday, so I can't tell you if they're already actively doing the creation redemption. But these ETFs will eventually have the creation redemption. If you look at ARKK to its underlying holdings, it is held very closely to that NAV. The price tracks what the underlying holdings are. Right now, the CTRU this morning in this moment in time is not tracking it yet because it's too early in the day, too early for, in its trading. It's day 2, hasn't settled. So it will. When we look at this a week from now, it's probably going to be tracking NAV. So unless the NAV comes up 11% in the next, day, which is highly unlikely, because is NVIDIA going up 11%? Maybe, but no. I mean, it's highly likely that people who are paying up 11% for this right now lose money. Highly likely. And there goes another 1,000. You could tell it's a retail trader too, because it's traded on FINRA, which is an off-exchange market maker that is providing liquidity to that. So I actually are seeing some sellers come on here right now. Some off-exchange market maker just sold this at 22.70, up 11%. They're making some money. All likelihood, going to make some money. The person who just bought 1,000 shares probably going to lose some money. It's not very often we can say with this high probability of people losing money, but it's and again, it's thin right now, so maybe it's going to do its own thing. But I'm saying when we look at this a week from now, it's probably going to be tracking its NAV. That's its job.
The other thing,
to track its NAV.
The other thing also is, like, if this were any other of her ETFs and the top holding is 10% or whatever, like Tesla, then you could say, oh, okay, there's maybe a chance that Tesla goes up, 10% today and matches up and catches up to the NAV. Or catches up to the price of the ETF. But because the top holding here is less than 1.5%, you basically have to have, like, all 10.
And the top holding is down right now. The top holding is down 2 points.
Right. So you basically have to have, like, the top 20 holdings in this thing all come up simultaneously to justify 22.70 in CTRU. It's not going to happen.
Again, I don't have the NAV sitting in front of me. I'm not even sure if it's published yet.
It's not.
But I'm sure, it's probably close to being in line yesterday. The market makers that are keeping in line are probably pretty good here. Yep. So we're early here in the pre-market. I would think this eventually comes back in the line. I don't know if it's going to come back in the line at 9:30. I would think it does come back in the line today, but maybe it's going to take a couple days till the locates get out there.
I just want to hop in here with
We just lost Joe.
My fault.
Okay.
My fault.
All right. Spencer's.
Sorry.
He's not used to
I'm not used to having Joel next to me. It's like a weird thing.
Just a quick question. Someone asked about the rollover of the futures contracts, and I talk about it a lot. And that's just basically when a contract expires in the futures, right? We're trading December futures. We have a quad witch coming up next Friday. traders that have a position in the December contract, if they want to keep that position and in the same position the next contract, they have to move it from the front month. So if you're long D's, you need to sell D's and buy March in the next contract. And what that does is just for a couple days, it creates just a little bit of the volume being split between the two. And there's a lot of people that trade the spread. Crude rolls over every month. That's why it's nearly impossible to trade the premiums, the contango and backwardation. You're always looking something different every month. But the financial futures, the bonds, the currencies, the S&Ps, they're quarterly. So it'd be March, June, September, December. And then just leading up, we haven't even been talking about quad witch coming up next week. So next week we have the Fed meeting.
It's true.
And we have quad witch.
And we did CPI tomorrow.
Yeah. So we just got the market hanging up here at all-time highs with a lot of potential negative catalyst on the horizon. But I just wanted to answer that question real quick.
All right. It is 8:16. Let's put on Marc Chaikin. He joins us every other Thursday at this time to give us his thoughts on the market. Mark, what's up, man? How we doing?
How are you? It's been a while.
Yeah, it's been too long. We missed you with the holiday. Hope you had a good Thanksgiving. If we had you on then, I would have asked you, hey, Mark, I would have said, hey, things are looking pretty good here. If we had you on the week after, I would have said, Mark, save us. Now I'm probably back to square one.
Joel? Mark, there's an imposter on the internet, and he looks just like you.
Oh, no. With a great secret?
He's been coming on with a great secret. And it is the perma bull. Marc Chaikin is now the perma bear.
Definitely not a perma bull, but I will share the great secret with you.
You will? Okay. Oh, yeah. Drum roll, please. Hit the
drum roll.
It's not plugged in. I got to do a manual drum roll.
Okay.
Digitization. Everything is going to go digital. And that's what we learned from the pandemic, that the world is going to change, and it's not going to be 9 to 5 in the office 5 days a week. And people are much more comfortable and demanding digital. So I've got a stock we're going to talk about at the end that I think is a really interesting post-pandemic play.
I like the tease, Mark. I like the tease.
Yeah. Hey, I'm learning.
Let's talk overall market first. So we got a major sell-off in growth names for about 3 weeks straight. We've had a nice 3-day rally in all of these growth names. It's brought the S&P right back to the all-time highs because we know a lot of S&P names weren't selling off in the first place. So first thoughts on the growth names. 2, thoughts on the overall market.
Well, the growth names can be broken up into 2 categories, the sort of FANG stocks, but also the semis. And let's take Apple out of FANG because it's really the serious cash generator. And I think those names are still holds and buys on weakness. So NVIDIA, Qualcomm, AMAT, strong stocks. And I think you need to own them and don't shy away. In terms of some of the stocks with no earnings, obviously, you may be getting a little bit of a selling opportunity here. In the Zillows, the Pelotons, the Zooms of the world that have bounced off the Cathie Wood bottom. I love the way you're caught up in the Twitter on the Cathie Wood stuff there.
Some people are telling me to cool it, so I'm trying. They say, take it easy on poor Cathie.
Well,
all right, I'm gonna start taking it easier on her.
This is not her fault. This is not her fault.
Yes,
well, no, but he's just saying overall, I definitely have. I've said my opinion of buying growth at any cost.
Yeah, it is her fault. She's bought into
it is her fault. Mark's
gonna get her. Into her own Kool-Aid. Come on. So, but in terms of the market, I'm still bullish. Obviously, as Joel just pointed out, we've got a choppy week next week. But in a sense, Powell pulled this all forward when he either deliberately or not told us that they were going to accelerate the taper, and everybody assumed that meant that they would accelerate interest rate hikes. That's not a given. We could get a very dovish call relative to what he said the day after Thanksgiving or Monday or whenever that happened.
Why can't we have a soft landing, Mark? I mean,
exactly. And what the markets do when volume is light and volatility is high is be dominated by the machine. So that to me, that's what happened the day after Thanksgiving. And then you had so many different things that sandbagged the market. But one thing that we've talked about that Dennis understands better than anybody is flow. And so much of what the market, quote unquote, gurus talk about on your show on CNBC every day is trying to explain short-term moves. The only way you can explain them, in my view, is flow. So you had an options expiration before Thanksgiving. Dealer hedges came off. I liken that to that announcement on the airplane when the pilot turns off the seatbelt sign and the stewardess says you're free to move around the cabin. After an options expiration, when the dealer hedges come off, you get more volatility in the markets. And dealer flows really explain these short-term movements. And then you got the Moderna CEO weighing in like a complete outlier to the Financial Times saying, oh, this is horrible. God knows why he said that, because he didn't have any basis for that.
He said that something similar in the morning on CNBC.
Exactly.
Yeah.
So bottom line is I'm still bullish on the market. Yes, we can have a soft landing. Historically, the first couple of rate cuts are not bearish, primarily because they come into a strong market for the same reason that they're happening now, to try and curb inflation. Now, I also think that his comment that it's no longer transitory is going to prove to be wrong. Sure, there are certain things like food costs that aren't going to drop down. Dennis has highlighted that very nicely on small items.
Labor costs too.
Like
it's going to be hard. If labor costs start to come up, that's something that is very sticky. It's hard to make people take a pay cut.
Well, so
if we start to see labor costs start to come up, which we are starting to see in a lot of different industries here right now, that's going to be a hard thing to bring back down.
Well, so here's the counterpoint to that. Obviously, you talked about hourly wages dropped in the last employment report from whatever the number was, but it was 1 or 2 basis points. And people are going to come back into the workforce now. You can't tell me that these people who have been disengaging from the workforce can afford to live without making money. So I think there's going to be a balance here. But bottom line, some outlier from Powell and whatever volatility we get on the options expiration next week, I think the market's going higher into the first quarter. Now, the analyst that I respect the most is this guy, Marco Kolanovic at JP Morgan. He had a handle on COVID back in March of 2020 or May. He understood the numbers better than most of us. And 2 weeks ago, he said, this new variant, Omicron, may push out all the other variants and then be more benign. It's going to spread more, but that's a good thing. And he came out yesterday and basically said, COVID is over in 2022 and the economy is going to be really strong.
That too.
So let me give you the big reveal. I love Live Nation.
What?
I've recommended it over the past month in my market letter. I think this is a great play. Their advanced billings for 2022 are now projected at a higher rate than 2019, which was their best year ever. People want to go to concerts. You're not going to hold them back, Houston notwithstanding. But Live Nation also has a digital presence. They've got a virtual entertainment hub where you can see concerts in your living room. They've got Ticketmaster, digital. So I think Live Nation is a really interesting combination of post-pandemic opportunity and digital entertainment and digital marketing. They market to people based on who they know are at these concerts. They market to influencers and they offer advertisers the ability to really target people. So Live Nation had a big jump when they reported that earnings report back in November. It came way down when the Omicron variant scared people, but the stock is coming back, and I really like this name over for the next. And this is not a trade. This is a play for 1 to 2 years.
So you're bullish the metaverse?
Oh, definitely. Unity Software is my favorite metaverse stock.
I mean, that pulled back nicely here.
Ooh,
let's just talk. Let's just.
That was more than nicely, by the way. I own that, so.
I bought some on the dip. I've already sold it though, so you know me. So I'm in and out, in and out, in and out. But it's one that I do want to own. One thing I have trouble just sticking in that long-term portfolio. How do you get like just past valuation? How do you just like, do you just not look at it on these story stocks? Is that what it is? Because you look at Unity and it's trading like, I don't even know how many times sales, like 25 times sales or 30 times sales is something crazy. That's where I have trouble just, getting past that, because I'm a value guy at heart. In the long-term portfolio, I'm a value guy at heart. And it's like, I can't put it in my retirement account because I just can't stomach paying 30 times earning or 30 times sales.
Well, so let's, if you were talking electronic vehicles, I would agree with you because nobody knows who the winner is going to be in EV.
Okay.
But Unity has a really entrenched position. They just bought Peter Jackson's company, which gives them some digital tools, filmmaking, editing, and creation tools. They're a real serious player. We've talked about this once before. More than 50% of all the games that are built in America are built on Unity's platform. So they used to say, well, if you're going to give your grandkids a stock, what would you give them? And it was Apple, and if you were smart, maybe Facebook. I think if you were going to give your grandkids a stock for the next 5 to 10 years, that Unity deserves to be in that portfolio. And that's how you overcome valuation risk.
So do you think it can grow into that valuation? You believe
Yes.
eventually we're going to look at this and say, okay, yeah, we're trading 30 times sales right now, but actually, and it's software, so you can pay a little bit higher multiple for software because the margins are going to be higher. You think eventually can grow to that valuation?
I do, and there's a kicker in here.
I like kickers.
3 years ago, Mark Zuckerberg sent an email to all his Facebook executives saying, if we want to be a serious player in the metaverse, we have to own Unity software. But the valuation is a problem here. So it's possible that if Facebook is serious about the metaverse, and if you look at some of their first efforts, cartoonish stuff that you could have done better with Unity as a kid in a basement somewhere. So I'm not saying they're going to be taken over by Facebook, but smarter people than I have actually alluded to that possibility. So that's the kicker.
We got another question. I don't know what your thoughts are on Roblox. People are saying you versus Roblox. What would be the better play? I think Unity is more the thing behind everything, though. Correct, Mark? As opposed to Roblox just being a platform that's,
I'll also say hi from over. I can't go. Okay, whatever.
Spencer.
I like them both. I like them both,
Okay.
but I think Unity is the scalable platform with the advertising server built in for small game developers. I mean, I urge my son, who's been building games for 35 years, starting with MS-DOS, to start building something on Unity. I said, with your creativity, you might hit a winner. So, but anybody can do that. You don't need the skills that you used to have to build video games. And if you're telling me video games are going to go away and people aren't going to create them, then maybe I've got a problem with Unity. But it's bigger than video games. They're using it in industrial situations now. You can walk through a building site with Unity goggles and software on and see where the air handler is going to be, and talk to your construction manager and say, no, I want to move it here. I don't like that, and so forth. So,
Mark, interesting. We got a question. Someone actually emailed me. Can you please ask Mark about gold? I'm doing that for you, Nina. I'm asking Mark about gold.
I'm probably not the best person to ask about gold. I've never been a believer in gold as a store of value. I'm not sure that, clearly the young generations believe that Bitcoin is the new gold.
That's right.
But gold as a store of value in an inflationary time, why isn't it going up if it's a protection in very inflationary times? It's not going up. Could you put a chart up, please?
Oh, I can do that. Yes.
Yeah, I guess.
I think at the best, it's just a trading range vehicle. You get your ranges, and it get overbought, never sold. I think the hedgers and the commercials, can move that thing at night. And I mean, I've been in it.
Wait, the commercials? Is that what you said?
Yeah, the commercials.
Yeah, like Chop-O-Matic.
No, I know what he's saying. You think that's moving the gold market?
Not the TV commercials.
Oh.
Spencer.
All right, sorry.
Gold coins.
Yeah,
So,
yeah. It's not the no.
My question would be
people that own a lot of gold.
Oh, the commercial banks.
Yeah.
Oh,
obviously you don't read the Breezy report that reports.
Sorry.
not
I like those commercials too, Spencer.
Not the commercial banks.
Mark,
buy gold.
You know what? I don't know. We may have to mute Spencer here on that one.
I just have to ask the question: if gold was a hedge against inflation, why isn't it making new highs right now?
Yep.
And that's sort of the answer to the question.
830 number.
What? Sorry, guys. Yeah, jobless claims. It's Thursday.
Yeah.
Yeah.
Let's wake up. We got jobless claims.
Oh, by the way,
with you for a minute.
Dennis was skeptical of Live Nation as a post-pandemic play. Marriott just turned bullish in our work.
All right, real fast. TGLS was if those of you are paying attention to Hindenburg Research, TGLS is your short report this morning. That just came out at 8:30.
What are your thoughts on this, Mark? I mean, we talk about the retail, we talk about Reddit moving stocks. I mean, you get these short reports from these companies that go on, they put on a big short position, then they write a report about it, and the stock tanks 31%, and obviously they're banking coin because of that. I mean, this has been done for years. Citron was the one that maybe pioneered this strategy, and obviously they moved away from short selling stocks because they got really squeezed on GameStop. But what are your thoughts here on just the ability to be able to do this, to be able to accumulate a huge position and then issue a report on it and know the stock's going to tank on your report?
Yeah, it's buyer beware. I'm glad you brought that up. Hindenburg, TGLS has been one of my favorites. We recommended it at 19. And it was trading at 34 yesterday. It's a real company based in Colombia. They make windows and architectural glass. They have solved the supply chain issues because they have partnerships with Gobain in Colombia, and they have shipping lanes that get us to the southern ports in the U.S., which aren't as backed up as the L.A. port. So I don't in the report. I view maybe if it really is down, maybe 2 to 3 days from now, this would be an outstanding buy. It's a very real company.
It's down 10 points on this report. It seems like in a lot of cases, like, I go back to the end phase one where we had, and I'm not sure who was the short seller that issued that report, but that was just turned out to be a massive buying opportunity. Sometimes, these actually, when they're bringing up these companies, there's something to it. But other times it's like you read these reports and you're like, well, are they really doing anything illegal? And sometimes they almost feel reaching a bit just to try to create a story to make the stock go down. Obviously, I've not read this report whatsoever either, so I can't, comment specifically to the stock, but they fall 31% because somebody, has an opinion on the stock. It seems.
This is a buying opportunity, in my view. I would ease into it over a 3-day period. Don't
we've
stick your
seen
neck
the
out.
playbook on these before. And has the company come out to defend itself?
The report came out.
The report came out 2 minutes ago.
2 minutes ago.
And they're going to come out tonight. They're going to defend themselves.
Exactly.
Yeah, well, let's see what's in there. But I can tell you that Florida is their biggest market, and it's booming from a construction point of view. And Technoglass sells architectural glass into the office tower market and now the home building market in Florida. You couldn't get a hotter, market for your products. And so I don't know what the report says, but in general, these guys are right about half the time. And when they're wrong, they sort of crawl away and there's no accountability.
What Dennis is alluding to is them out there covering it today. Shorting it.
It would be bad. I don't know if that's happening. That would be bad, in my opinion.
Yeah,
if they're doing stuff like that, that's where I think regulators should step in. I'm not sure if that happens, but so just hypothetically, you put on a huge short position, then you issue the report, and it tanks 30% on your report. Should you be allowed to cover it that day, or should you have a period, like a quiet period for yourself, where you're not allowed because it's your report that caused to go down? Why should you be allowed to make money just off of, because everybody is all of a sudden, knows your opinion on it and knocks down 30%? I think they should have to wait like 30 days or something after issuing those reports before they're allowed to cover. But that's just my thoughts.
Well, that's an interesting point. But what if the media didn't cover this?
That's also a good point.
Well, it's all media. Everything's media.
So, they're going to say, well, we just issued a report, but you guys blew it up.
That you're right, Mark. You're right. Frankly,
so
media's fault.
But then,
I didn't say it's the fault.
It's your
no. Hold on. But then it comes down to, well, wait a minute. Why is the stock all of a sudden why did it just dip $8 just there. It just fell like 30%. What's that about? Oh, here's a catalyst. Shouldn't the people need to know that?
Oh, you should, but that's the reason why they should be able to cover. I mean, it's not like they beat everyone up to sell it. You know, they have a megaphone, they have a bully pulpit, and you know, I don't know how you regulate that.
Yeah,
hard. I mean, it's gone on. Citron's done it for a decade, so obviously they're not doing it that way. But there's never been any repercussions, so they obviously don't know how to regulate it. So they're just choosing not to.
Well, but look at all the guys who go on your show and CNBC and talk their book.
Oh, I know. Everybody does. Everybody does. Where do you stop?
The other side of it is, what would you rather? Them not talk their book?
Exactly.
Right. So it's a lose-lose situation.
It's tough. It's a tough job.
Who was on? Right. It was Einhorn. I think it was Einhorn who was on CNBC at the bottom, near the bottom in March of 2020, talking about how the world was coming to an end, but he was buying distressed debt.
Yeah.
You know, in the very stocks that he said would get hurt. So is this any different? I don't know.
Yeah, it's definitely a difficult thing to regulate. So regulators a very tough job here.
Marc Chaikin joins us every other Thursday.
Thanks,
Mark, always a pleasure to have you on.
And for me as well. What do we do? We don't have a holiday conflict in 2 weeks.
No. Well, we'll see you in 2 weeks.
Right before Christmas. Maybe we get another Christmas Eve massacre like 2018. Pal.
All right, you said it, not us. Thanks a lot, Mark.
Be good. Enjoy.
All right. And Darius is right too. Bill Ackman on CNBC crying during COVID while also loading up on longs. Let's talk about Roku here. If you guys didn't see this one yesterday, I'm not sure how that's possible, but it popped. What did it go up? 20% yesterday on the headline that they reached a deal with Google. So they were up against the clock. YouTube was about to be yanked from the Roku platform. They come out and say, oh no, we've made nice. It's all good now. Stock rips higher up to $260 even. Let's bring the chart up on the screen. There you go. I mean, my thought was, people are going to say it's higher because of the deal with Google. And we all know that if you look at the daily, the stock has gone from 490 to 190, and stocks like that can rip. And this is just an excuse.
And again, they were looking. It is an excuse, but it was the biggest name you can get. I mean, you know, really, when you get a deal with Google or Amazon, those are as good as it gets. So it's not surprising, but it was also the perfect timing because these stocks were starting to come back. I mean, look yesterday, DocuSign probably leading the charge. I didn't think you wanted to buy that dip. Dead wrong on it because it continued to move higher. Obviously, they were looking at what hadn't gone, and they started buying them. Zoom had a great day. I said even Peloton, you know, which is obviously didn't participate at all the day before. They finally go yesterday. They were like, no, we're buying anything growthy, anything that's got a higher PE. That's what we want to own right now. We're playing the catch-up trade, combing the ditches, whatever you want to call it for the higher growth names, and they bought Peloton as well. So Roku fit right into that, along with the positive headline from Google, which is a great, you know, a person or a company to have a headline with, and that's why you see the stock up $40.
Yeah, I mean, now what? Now, you know, you're looking for
hard
more,
to buy
right?
now.
Yeah, now it's at 56.20. You want to see it stay green on the session. Obviously, it's just hanging in there. First things first, let's take out yesterday's high. I'll just give you a few targets and a gap here. If you're looking for more above that 60.99, 64.20 would be your next daily high. And then I think you get into a gap area at 269.29. So if you're looking for 13, 14 more points on it today, I would just be, you know, if it went red, it's just really hard after the kind of day that it had yesterday. Just hard to find a point where you just would want to step in and buy it if it goes red. Just hanging green right now. So
it's amazing to be hanging green though after a big day like that. One thing I will say is if they're short, you got to think there's some people, I don't know what the short interest on this, and look it up, but it's broke trend now.
Short. Yeah.
There's a heavy downtrend there. It broke the trend, so now you get the Momo guy saying, okay, so you got to think on pullbacks now. You're probably going to find buyers. So we tweeted out, did Cathie what bottom? I tweeted out 8 minutes after that bottom happened, on December the 6th. And, I was thinking, okay, dead cat bounce. But now, with the legs and continuing yesterday, you're like,
so
man,
hard. Yeah,
it's not only just a dead cat bounce right now, maybe it is the bottom. So you're looking back, the stock's up, ETF's up 14, 15% here in 3 days. Incredible Obviously, wish I would have bought more growthy names. Obviously, wish I would have held them all. But I was looking for a dead cat bounce. I just did not think 15%. So it's bounced way more than I thought it would, ARKK. And the reason we keep going back to ARKK is because this is all those same growth names.
Oh, hey, shout out to Dave Sharp in the chat. He goes, look at CTRU now. Yep, somebody came online, Dennis. Somebody came online.
There you go. I give you guys, but nobody can make money on the short side. But if you were long it, you should have been selling. If you were long it, you should have been selling.
It's at 2091.
But what's the symbol on it?
CTRU.
CTRU. It was 2270 when we started talking about this. It was up 11.9%. And I'm just telling you. And
look under the hood.
Well, the holdings weren't up. And if you think it's going to be up 3%, it's probably not even going to be up 3% as they keep coming in line. But they're bringing it back in slowly. 930 comes on, and you get that the creation redemption start coming back in. And, in 3 days, it's going to track its NAV. So when you're buying an ETF, don't be buying in the pre-market when nobody's online and you can't borrow the thing and the prices can't stay in check. So everybody was buying 2270, just simply throwing and burning away money.
Just one other thing.
At least in the short run. It could anything go on in the long run, but you would have been better to wait.
Just the last thing on the Roku, and Dennis, what you were talking about, you had to move from 340 to nearly dig it under 200. And you had all those days to buy the stock on weakness, right? You could put your bid out there and just get peppered, right? You're building a big position. Sure. Now you have that, you had the little bump off the low, right? Maybe someone got the memo early, but now it's a whole different market. It's a whole different dynamic. Yeah, I shorted at 240 yesterday. I'm just making up a scenario here. I did not short it, but I'm short at 240. If I could just get 240 today, I'm done. I'm going to move on. I'm never shorting stocks again. So it's a whole different market structure and market dynamic. So if it filled, for me, I'm a scaredy cat. I'd like to see it come back down to 220, 225, fill the gap and maybe buy it. Doesn't look like that's going to happen today. It's staying green.
But these things, once they get the momentum kicking, can go a lot farther than you think they can. And just because, I thought we were oversold on ARK and I thought we were going to get a 5, 6, 7% bounce. I didn't think a 15% bounce. So again, blowing through the 100 level, now it's showing me that there is legs behind some of these growth stocks, and there will be people just like Sentinel yesterday on the dip. S and full disclosure, I do have position S. That dip was bought. And why was that dip bought? Because it was a growthy name, and growth in the last 2 days has come back into favor, and they're buying dips on growth again. So it's, again, as a trader, you got to continuously be digesting all the new information being given to you by the market. And we had a bottom on all the Cathie Wood names. We had a bottom 3 days ago on all the growthy names, and now you're seeing people chase it. And on pullbacks, on a when you get a growth name that gets hammered on earnings, the dips are getting bought for the simple reason is that they're looking, where can I get growth? Oh, here's, giving me a chance back at, Wednesdays or Tuesdays lows. So that's the way this market trades. That's the way you've got to just always be on top of the rotation. First things first, when I come in the morning, I'm always trying to identify the rotation. Rotation is key. In some markets, just everything's going up, everything's going down. But 2021 has been the year of rotation. And if you can identify that rotation early, you can make a lot of money on your day trading.
All right. It's 8:43. Let's get to a few more stocks here today. I want to talk about RH. Credit to Aaron Bree on this one. We were talking about this one at like 3:45 yesterday. He goes, "Oh, Restoration Hardware. Yeah, they definitely blew it away. Everyone flush with cash and doing stuff for their home, and that's what happened. They earnings beat and they gave a guidance raise to go with it. So a $500 stock is now a $600 stock this morning.
This, again, is a name that was loved. Again, a little bit higher valuation, so it got hit during the last 3 weeks. We know higher value names got hit. Now it comes out and, beats. And if you think logically about that, who was the person that said that?
Aaron Bree at Benzinga, producer AB.
Bree, Aaron, you're completely correct. I think about, what my wife's doing, with the house. And we're buying house stuff all the time. Obviously, we're building a house, so it's a little bit different story. But people are still spending money on their homes.
Yep.
And that trend, I don't know if it's going to go away eventually when we start going on vacations again and start doing stuff. But the trend is still here, at least for this moment in time. Williams-Sonoma, obviously going to trade up in sympathy. I haven't looked at it, but I'm just assuming it's trading up in sympathy. Yes, it is. It's up $1.34 here this morning. It was trading up last night. I can see some ticks from last night up in the high 186s. So, again, this is just this trend of, where people, if they're still sticking around a little bit close to home, they're going to spend money on their homes.
Don't have my pre-market charts up here, but I'm just looking at this move from 744 down to 5 1/4, 220 point move, right? 110. That puts you at 630, 640. Not sure what the pre-market high is. If you're looking for more than this, the 630 area, you're getting half back. 645 and 650, 149. But like I said, I don't have the pre-market chart. Keep an eye on that pre-market high, 929 and 59 seconds. If they want to hold that level, boom, take it up higher, then you can't go against it. If it takes out whatever that pre-market high is, there's some downside. I have absolutely no idea where to buy this on a pullback. But getting half of the move back and took it. This is different. This is something you and I talked about too. The bright days when the market went down, it went down so fast, right? And then these markets with the machines, it's equal. It goes down just as fast, and then it comes. These rips are even faster. The machines are not bullish or bearish like I people.
Well, it's and everybody and obviously when we started in 1999, it's completely different. Or when I started in 1999, you started before that. But when I started Bright 1999, completely different experience. The NYSE was 8 seconds to get an execution. We were direct. I mean, at Bright Trading, we had direct connection. So I send my order, it goes directly to the specialist on the floor. Specialist on the floor manually filling it and sending the confirmation back, and it would take about 8 seconds, and they got it down to 6. Then they got that auto NX execution. We slowly started to automate, and obviously, it's a completely different experience now. But the one thing I will say, the difference, and you got to be careful, the fat fingers can happen in this market for the simple reason is that back then, when it was 8 seconds, it's like you put an extra 0 on your trade, or, you accidentally, send an order. You could cancel right away, and especially he's screwed up, and there was that chance to cancel your order. Not anymore. I mean, it's executed. You hit buy, the order's in there, and it's gone, and executed confirmation's back on your screen in milliseconds. So speed is awesome. But when you make a mistake, there's no correcting mistakes. So it's a completely different market than it used to be. But the markets are very fast, and the rotations are fast, and the algos are fast. But you know what? The algos, and I've always said this as well, I've got a friend, that has done programming for a lot of, market makers, a lot of high frequency traders. And he's always said, I don't know how you're still in business as a human being, because I've been trying to put you out of business for a decade, by obviously programming for the high frequency traders. We sit down, he's a good friend of mine, sit down, have dinner with him and talk. The reason is that because they're always one step behind to a certain extent. I can identify these rotations, where, the machines can only do what they're programmed to do. So when there's a change in inputs, a human being can adjust immediately on the fly. For the machine to adjust, you have to have the programmer first identify the same thing that I'm identifying, then program it in, and then obviously back test and make sure it's programmed correctly so you don't get an issue like Knight Citadel or like Knight, from 2012 where you have a bad algorithm. You've got to test that stuff. So once you put automation in, if it's not right, big mistakes big money that equals big losses.
Yep.
So I mean, the human being can be one step ahead. For the simple reason is that they can adjust on the fly, and it takes the algorithm sometimes days to figure that out.
All right, here's what's going to happen. I'm going to bring Mitch on here, and for the next 12 minutes, there's a chance that Dennis and Mitch will be the ones to take you into 9 o'clock. The office is getting very rowdy, as you can see behind me. I'll go full screen. You can see there's a lot. You can't wait.
It's like a mosh pit going on behind you.
Yeah, there's a lot of people here. You can't even see most of them because they're all in the kitchen. But it's getting very loud. So what we'll do is we'll bring Mitch on. I'm going to try and join from a different studio here in the office if I can. And if I can't, then I will see you guys over on the Benzinga Small Cap Conference stream, which starts at 9 o'clock after this show. But let's bring Mitch on, and if I join, it'll be from a different room. So
Mitch likes to come in and take your last 10 minutes.
That's fine. He can do that. Mitch, what's up, man?
What up? What up? How we doing out there, guys?
Me and Mitch running the show.
Now it's time to talk about the hot stocks. Let's get these stocks. Let's what is moving out there today. So
let's go ticker time.
Let's do an analyst rating before Spencer gets here because he doesn't do these anymore.
Bring up that pro. Let's see some ratings. I haven't even looked really today. What's going on in analyst land?
This one's a Fubo rating today. So
Fubo.
Fubo, let's go ahead. I'll put up a chart here. So Fubo sees JP Morgan sees 41% upside in Fubo TV. Pretty much they gave a nice lift on that rating. Initial coverage here.
Initiating on a buy.
Yeah. And they see a $28 price target. So right now we're trading at 20. So that's like a 40% upside look here.
Yeah.
I'm wondering if we could come even back here towards this 34. That was the resistance that we really turned away from. And this one had that hard turnaround. I saw a lot of stocks do this where they were setting up bullish moves and then quickly turned around. I'm wondering, if this can hold 20 today. I kind of like it, but I know a lot of people are looking at Fubo. What do you think about here?
Well, JP Morgan, obviously I rate the analysts to a certain extent. And there's, some boutique shops that really can control price on certain stocks. But when you get the big guns, JP Morgan is a big gun. So there's a lot of clients, there's a lot of customer bases that are going to be getting that note, and people saying, oh, I'm interested. This was a name that was very sexy a month and a half ago. Obviously, all of the stuff cooled off substantially. Fubo got cut in half from 34 to 16. Was it an overshoot? Probably. We were oversold on everything. Now we're coming back. It is critical. You've identified the 20 level that continues to hold. I think with the JP Morgan buy rating out there right now, unless we really roll over in the overall market, it probably does hold that $20 today. You got resistance up at 21.85, and then after that's 25. I know Joel finds levels everywhere, but I'll go a little bit further. I think 34. It's going to be a long time before it gets back there, but can it get to 22 to 25? Maybe. I'd rather buy pullbacks, but again, in this case with the JP Morgan note, I don't know if you're going to get much of a pullback.
Now, one thing I will note is that you see a lot of these charts where they did these kind of fake out breakouts, then a little U-turn at the bottom. It's going to be interesting. 3 straight days of green. Do we hold those lows? That's what I'll be watching today, and we'll keep watch on Fubo. Let's transition into EVgo. EVgo is trading up today off of their platform. Interesting stock here as it's been pushing up. Pre-market, looking at this move here, it looks like it's holding well above 1350. So I would look for pullbacks towards about 1340s at the bell. We'll see if we get this move. Of course,
this is a JP Morgan pop as well, Mitch, here. So they're initiating with a buy, and they are putting a $20 price target on this thing. Yeah. Again, just like we said before, JP Morgan, huge influence. Obviously, a lot of people are going to get those notes, going to talk about it. They've already talked about it on CNBC once as well. So not surprising, it's getting a good lift here today, up 13%. I never like to chase. I always, me, if I want to buy a stock, I usually wait for a dip to buy. This is buying a rip. So I personally, just on my opinion, would wait for a dip to get back into these names. But right now, the story has gotten hot again for a lot of these growth names. People are looking and they're hungry for growth. And, this is one of those names.
Yeah, one that I'll be watching today was released also that their platform PlugShare reached over 1 million annual downloads. And Morgan also in that analyst call out called them the leader in fast charging. So definitely going to be on watch. I'd watch this one today. Also, ChargePoint, the relationship. Let's see if this affects it today. This one's been bouncing off that 19. I'll keep these on watch. All right, guys, let's go. Looks like it's 9:53. I'll take some ticker time. If there any other hot stock that you guys want to talk about, definitely throw it up in the chat. Did I get that? Looks like Spencer is busy here, so I'll definitely just keep leading out here. ChargePoint. Yeah. Let's go ahead. Let's look at what's out there. It looks like someone's calling out CVS. Hertz calling out CVS. That's an interesting play.
They had some guidance here today. I saw it go by. I'm trying to go for my memory here.
I'll get it right now.
I'll bring it up with the pro. So 639, they raised guidance from 824 up to 810 to 830. They see adjusted EPS in 2021 up at $8. So guidance, the stock is not expensive. We know CVS is not expensive. Coming out and it's not much of a guidance raise, but it's enough that so it's still obviously looking a stock that's been fairly cheaply valued is saying they're comfortable with their earnings. That makes the market more comfortable. That's why the stock's trading up $2. I mean, we are approaching on CVS quietly. We're approaching 5-year highs on this stock. So you start to think it's $95 now. The old Kenny Glick, when you go 90 to 95, usually eventually get to 100. I'm not saying CVS is slow. It's not a stock that's going to get to 100 today because it moves a lot slower. But does eventually CVS see $100? I mean, Probably. There's a lot of people going into those stores, some to get vaccinated, some for lots of other things as well. I think on pullbacks, I'd be a buyer of CVS.
All right, let's keep going. CVS, I've been watching WBA and also RAD. We'll see if those can continue. I think those were on watch a little bit, maybe with some testing from Omicron, but I don't think this is as serious as we thought it was. We'll continue to watch these stories.
That's good news.
Yeah. That's good news, especially not maybe good news for these stocks specifically, but good news overall for us all. Let's keep going. Let's go to another one here. Adobe being mentioned in the chat here. Adobe did have that hard down day on Friday, but now has been coming back. Almost filled that complete. What are you thinking here?
640 now. Okay, so we got to start thinking the washout lows or the washout lows. Will we eventually get a retest of those lows? It's possible, but I don't. Right now, you're setting up seasonality here too. So the mindset has completely changed in 2 days, where we went, to fear to FOMO. So we went from FOMO to fear for 3 weeks, and now we went back to FOMO on all of these stocks. Adobe is not a crazy expensive stock, but it still fits into the whole growth category here. I think you got support where the two lows from the last couple of days at 640, so 640, 641. I think you hold those levels unless the market starts to really roll over. I think 640 is going to be a level it's probably going to want to hold.
All right, we'll see if it gets above 650, 640 downside. Does it feel kind of into this gap today? We'll definitely keep these on watch and see if there's any rotation that we can find out there in the markets. Let's keep going. Next one being brought up here. I did see it had a good day yesterday. Actually, we didn't talk about this one. Let's make sure that we get to it. So Lucid, of course, they did put out an offering. Let me delete all
a convert offering last night.
Yeah, convert offering put out by Lucid. Let me give you the exact amount right here, pulling it up on Benzinga Pro. Looks like we had 1.75 billion convertible senior notes. Definitely pulling back down. This was a move in the after hours. A lot of what we watch. Look at the 15-minute. It really cracked down there. Yesterday, it was trying to come down towards that low on the 6th. Do you think we get towards that level today?
I think you're going to bounce if you get down near that 38, the December 6th. So 40, 38. We don't know the price of this yet. I don't think it's come out with what the actual pricing of the convert note is, like what price they can convert. Yeah. But I think on a pullback here, there's people, again, hungry for growth names here now. Whether that turns today, it's not turned in the pre-market here, though there's still people hungry for this. It's a little healthy pullback in some of these names. I think you do find buyers in the 38 to 40 level.
Yeah, I think you're going to get a test down towards that 38 today. So I'll be looking for maybe a short into that move. But yeah, I could expect a good bounce there. It's definitely a good level that's going to be watched. Was resistance in this prior kind of November, right before we broke out. We'll see if we can catch a dip there on Lucid. Next one up, being mentioned twice, so I'll go ahead and touch it, is Disney. Disney being talked about here. Yeah. I don't see any news, but I do see it starting to bottom out. The question is this the bottom on Disney? It's a hard call.
The only issue I have with Disney, and I did put a half size position in the long-term account because I couldn't take it. So when I put Joel always makes fun of me whenever you put a half size position on, you're not very convicted. Yeah. And it's true. It's just like I've wanted to own Disney for a long time. It's come down so much here. I do believe eventually Disney figures out. Maybe eventually they figure out Disney Plus. That's been the issue though. Is really Disney Plus. But if we go into a full reopening, is there a better reopening trade than Disney? So if you think that COVID is if you think JP Morgan is correct, and you think COVID goes away in 22, it's hard to find a better reopening play than Disney. I tell you, I got my 4-year-old, my 7-year-old. If we were all safe and we felt we were safe, my 7-year-old just got vaccinated. If we felt we were safe, I would take my kids to Disney tomorrow. So eventually, maybe we do feel like we're safe, and eventually Disney, I think, is going to be a huge reopening play here. So I think if you're buying Disney in the 150s, I think in the long run, you're going to be happy. I think in the short run, they still have issues. Obviously, ESPN forever, but they have issues with Disney Plus. They have content issues. I've said that for the last 6 months. They don't have enough content on there. The content they have on there is excellent, but there's simply not enough of it. So they're going to have to start focusing on that. If they want to compete with Netflix, they've got to get more content. They've got to get new shows. They've got to get more production going there. But I will tell you, long run, I think Disney figures it out.
Yeah, I think one thing that's going to help them this season is normally there's a battle, right, of the holiday movies between the streamers, whether it be Netflix, Hulu, Paramount. Who's going to have access to the holiday movies, right? Well, Disney is the major leader here, and a lot of times they were leasing out these movies, but right now they're taking them all on, and they're trying to hold them tight. Movies like, let's say, Santa Claus, Home Alone, those kind of movies. I think you might see some subscription boost because of this, and like Dennis is mentioning, for the parks opening up, we'll look to see if kind of the environment gets better here for Disney.
Al Don in the chat too, a point that we've made on the show, and a good point, is he's saying Disney eventually will be in the metaverse. I think Disney is going to be a huge metaverse player. I think Disney might be one of the metaverse players. You just think about the experiences that you could have going to Disney World and now being in the metaverse and being, put into maybe movies or put into some of these places. Disney is going to be a huge player in the metaverse, and that story has not got any traction yet. So eventually, if we still keep talking metaverse, is there any company really positioned better to? Well, there is obviously Unity. There's a few, but don't discount Disney as a metaverse play. So I like Disney long term. Yeah, I think on a pullback, I think I will move it up to a full size position. So full disclosure, I've stuck this in the long term account. I might stick some more in the long term account.
All right, let's go ahead. Let's start wrapping up here. I know that you got an important trading day. Also, of course, PreMarket Prep Plus. I'm not sure if Jill's doing PreMarket Prep Plus today, but definitely, guys, check out the event this Saturday. Do not miss out. This is your chance, guys. PreMarketPrep.com. You guys can see execution, which was one of the top questions that we got about order execution, these ordering routes. My man Dennis, definitely the expert here in those, is going to be teaching on this on Saturday at 9 a.m. Don't miss out. And now, coming on next, have a good one, Dennis. All right, guys, I'm going to bring you guys to the small cap conference now. It's already starting on up, so you guys go ahead and join in. If you guys want to live trade with me, I'm also going to be in the chat hanging out. So if you guys want to go ahead and just join in, normally we have live trading here. We're going to go to the small cap conference, but I'll still be trading in the chat. You guys join in there. We got some great companies today. Tilt Holdings. We're going to get into a lot of kind of these health stocks here. We got recruiter.com, a lot of NASDAQ stocks, New York Stock Exchange. So come join in, guys. There's going to be a lot to learn. And like always, we'll do it right here on Benzinga, and we'll see you next time.